Hello everyone, happy Sunday. It's about 1 p.m., March 28th, 2021. I'm Nathan, as you already know. Maybe YouTube has a lot more viewers than our Ultimate Traders on Reddit. So I want to make two different videos. This first video is probably going to be a little bit longer. It's going to go over the 15 or so posts that I carefully wrote to help people that are new to trading, people that are very experienced, have been trading for a long time. I mean, if you have been trading a long time, maybe it's just a positive reinforcement or just ideas to go over. So the Ultimate Traders Forum, a lot of people that follow me, maybe a lot of you are new also, is pretty much new. You know, I created the forum about a month ago because what happens is I was banned on two forums. I have close to 1,700 followers at the moment. I was actually going to wait till I had maybe 5,000 followers before I created this forum. What happens is one of the forums has about 2.5 million members and banned me for 90 days. Another forum that has 1.5 million members banned me permanently. Another forum, now I'm not here to make any enemies, and on YouTube I have like 20 followers, and a forum is about 740 strong, so I won't mention the name of forums, and I won't mention stock ticker symbols until I at least get 1,000 followers on YouTube, because if I can't even get 1,000 followers on YouTube, I can't monetize this. So as a lot of you already know, I've been doing this hopefully that I can get some kind of notice from someone. The last 2 weeks I've been tweeting everyone and anyone. And for those of you that are in Nautilus, NLS, last night I spent at least an hour reaching out to Baird Group, Silver Lake, Blackstone, Eris Capital, the Carlyle Group, and Starwood. These are all firms that actually take private placement in a company or buy out the entire company. Like if the stock is too cheap, they will actually go into management. I guess kind of like what I'm doing, because I did reach out to Nautilus, and like I said before, I was very impressed that they got back to me the very next morning at 10 a.m. And even if they did follow my direction to have all the people in the board of directors do purchases, realistically, how much can they buy? The CEO might be able to buy 10,000 shares, 20,000 shares, and that's what, 300,000, which is a lot. But look at Silver Lake. Silver Lake in 2020, their revenues, it's a private company. You can't trade the stock. Apollo Management is the only one that trades that I'm aware of that actually goes in and does buyouts, that trades publicly. And I did contact Apollo Management also. So what I'm trying to say is, even the insiders at Nautilus, even if they go in and buy, even if they follow my direction where I told them that if they all buy, I will fight for them and go to the other forums with a lot more members and try to make something happen. Even if they all do it, how much are they buying? Let's say after I spoke to them on Wednesday or Thursday, they're the ones that bought 500,000 shares, because there was an order for 500,000 shares, about 1575 that went through. Let's say that was them. They had to go in a group to get this 500,000 shares, which is a lot of shares. But if someone like Apollo Management, Starwood, Silver Lake, BlackRock, I even contacted Vanguard that handles mutual funds. If they go in, they're not buying 500,000. They're buying like 25% of the company. So it's going to skyrocket. But going back to this video, the whole purpose of this video is to go over the 15 or so posts. I'm going to look at my computer screen because since I started our forum about 30 days ago, I made about 15 posts that are gold mines for anyone. And like I said, I'm not here to make enemies. I only have, 20 followers on YouTube. So I won't mention the big forums, and I won't talk about the tickers. But if you follow my Ultimate Traders on Reddit, you can clearly see the posts where I do mention the group, I do mention the tickers, I do mention the names of money managers, hedge fund managers. But for the purpose of YouTube, and I just opened it yesterday, I will omit that. So when I first joined Reddit, like I said before, I had thought that the big forum was a group of 500 to 1,000 skilled, masterful traders, which was hilarious. I thought it was an elite group, but you know what? We are the elite group. I'm letting everyone know that we are the elite group. Ultimate Traders is the elite group. So when I joined, and now we have about 740 of us at the moment, I'm one of the 740 Ultimate Traders. By the time we're all done, we will all have the ability to make lots of money or be money managers. Because just looking through the list, like I listed it yesterday in the post, how to read earnings, how to spot shill companies, why this correction was inevitable, whether you want a day trade or swing trade, or how to become successful, how to be a millionaire, what to expect. Now, I'm going to get into that. But what I'm trying to say is by following just the posts that are on here, that I'm not charging anyone. You know, I didn't get any kind of compensation. I'm not an author. I have a W-2. Just reading these posts that are on the Ultimate Traders Reddit platform. You have the gems for free that make you very successful. So we're going to get into this now. I hope to spend maybe 2, at most 3 minutes per the posts that were big, and there were about 15 of them. So when I joined, the very first thing I wrote about was the daily routine of an active, successful day trader. The sacrifices that you have to make. So before I joined Reddit, because now that I joined Reddit, I have been getting up a little bit earlier because I feel like a responsibility. Sometimes I get up at 4 in the morning, like for Tiger earnings. But generally, I get up at 7 a.m. I take a look at my watch list. And I said before, watch lists are super important. I take a look at CNBC. I try to see sentiment. Sentiment is major. It's everything. It's going to tell you in the morning at 7 o'clock whether or not the market is going to be green, where it's going to be red, what's going to go on. So I go to, I watch CNBC. I go on my computer. I go to CNBC.com. I go to SeekingAlpha.com. I sometimes even go to Fool.com. I go to Yahoo Finance. Those are sites that I'll try to check for news that just happened the last hour or several hours or whatnot. Then I'll continue to look at my watch list. Now my watch list is very, very extensive. I have created different watch lists. I have approximately 800 tickers, might even have more, but approximately 8. So what I do is I take a look at my 800 tickers. Try to look for anything strange, like if the stock is up a lot, if the volume is a lot more than it should be, if earnings came out, if it's up or down more than 5%. Because normally if one of those stocks are up or down 5%, check in the news. Load it up, see what's going on. Take a look at the charts. Take a look at the level 2s. But these are just some of the things as a daily active trader that you must do if you want to be successful. Now, if you don't want to be successful, or if you make money in other ways, more power to you. You know, I'm not jealous. Hey, that's hats off to you if you can do it. But basically, if you wake up at 9:15 or 9:20 and you don't have a plan set up, like you didn't pick 5 or 10 plays that you're going to watch today to trade, and you just randomly pick stocks and make money, you are the person. Like, I should be talking to you. But honestly, over time, it's not going to work. Over time, it's not going to work. Yeah, it could be working now. You know, it's a bull market. From June 2020 to right now, March 28th, I've never seen a market like this, where the S&P dipped 35% and recovered to new all-time highs in less than a year. Never. Okay, so that was the one main post first. So the second post that I wrote about was basically momentum and speculation. So with this post, like I said, with the thing with YouTube, I'm trying to gain followers at the moment. So I'll refrain from talking about the symbols, but I'm just going to go over the principle. And if you go back to Ultimate Traders on Reddit, you will find the post there. So with this, speculation momentum, like if you've been trading a long time, I've been trading since 1995. I was about 14, 15 years old. So if you've been trading a long time, the whole point of that is speculation and momentum move stocks. They move stocks much faster than any fundamentals. Fundamentals in the long term work out and are much safer, and you can make quite a bit of money in momentum and speculation. So I have nothing against if you want to get into momentum speculation. What I would say to you, though, is to make sure that you don't hold it overnight. Why? Because tomorrow the sentiment can change. So if the stock was up 10, 20% yesterday and you didn't sell out, you didn't take profits, what about tomorrow? Do you want to rely on the herd, the whole bunch of people, to keep bidding it up day after day? I'm not saying it won't work. But I mean, if that is your recipe to make money over the long term, I am telling you, it won't work. You know, if it works on 1 or 2 tickers over a small period of time, hats off. You know, if whatever the case, hats off to you. That's great. But over a long period of time, don't do it. It's not a good formula. It's a recipe for disaster. Let's say that you do it. And most of the time, you win. You win, because that happens. Let's say 6 or 7 out of 10, you pick momentum. You pick speculation. You were up big. You won. But the 2 or 3 that you decided dine in the hand are down 80 or 90%. And because you decided dine in hand, what happens to the 70%? That you were correct and you made money and momentum. So that's what I'm saying. So I mean, there's a lot of money managers that do this, but like I said, for the sake of YouTube, and I need to get 1,000 followers, I won't mention any names. But in my Reddit, you can see them there. So to make money on speculation momentum, and just a tidbit, usually I spot this. So I have my tickers on my watch list. I usually have maybe an idea of 10 stocks that I'm going to play daily. So let's just say that speculative or momentum stock is on my play watch list. I'm ready to play it. Okay, if I see the volume at 10 a.m. is already surpassed 30-day average volume, chances are I could jump in at almost any price almost, and ride it for a quarter, 50 cents, maybe even $1, and get out. Because the volume is so heavy, just like the other day Once again, I won't name symbols, but the other day we had a ticker that is somewhat defensive that pre-announced bad earnings. I bought the stock at 1825, 1840. It rode to 1760 or 1770. I wasn't concerned. Why? Because the volume was massive. I knew sometime throughout the day, as long as I watched, I was going to get out at a profit. Unfortunately, when I was up and I did make a profit, I didn't hold, because I got scared and I had a chance to trade it more. I traded 2 rounds. So each round is a buy and sell. So with speculative momentum stocks, I don't recommend you holding overnight. And if you trade it early, like 10 before 12, there's a good chance you will be able to get out before 4 p.m. at a profit. There's a very good chance. I would say the probability is 80 to 90% that if you buy it at 10 in the morning, almost whatever price you paid, there's an 80 or 90% chance by the end of the day you will profit at least 25 cents to $1. Now, a lot of people on Reddit were knocking me because they were saying, "What is this 25 cents? What is this 50 cents?" Honestly, I'd rather make 25 cents for sure than hold out for tomorrow and lose $2. I mean, if you have a problem with that, sorry, whatever. Okay, let's move on. So on the next post, so that was momentum. On the next post, what do we do if we are in the correction? Or how to spot a correction. So a lot of my posts go over this. So a correction is when an index is down 10% from peak to trough, from trough to current what prices are now. So like right now, unfortunately, the Nasdaq is there. So you can spot a correction if you get 2 or 3 heavy days of selling. Unfortunately, with the market, it's momentum, like I said before, momentum and speculation. So if you get 2 or 3 straight down days, we're going to use the Nasdaq. I don't think anyone on YouTube is going to go after me for saying the Nasdaq. So if you get 2 or 3 straight days where the Nasdaq is down 200, which is about 1.5%, that's it. You got to spot that a correction is probably imminent. When the Nasdaq crashed in the year 2000 or in 2008, it took about 2 or 3 weeks. It wasn't like a long period of time. You saw the massive selling happen in the first 2 weeks. So that's a signal. When you get two or 3 days of massive selling, timeout, pivot, let's go defensive. Because listen, even though, and I am a great trader, I am, not I think, I'm telling you I am. I'm telling you I probably am better than money managers, hedge fund managers, you name the person, I'm pretty sure I am better than them. So what I'm saying is we don't control the market. Even we don't control the market. So when the market dips like that, it's better to get defensive. So that was like a third post. What do we do if we're in a correction? Or how to spot a correction. All right. So that was that. So the next topic is how can you tell if you overpaid for a stock relative to itself and the market as a whole? Unfortunately, the last 9 months has been unbelievable bull market with everything that's going on. Historically, the S&P trades at maybe 20 or 22 times earnings. What does that mean? So the S&P 500 is a basket of 500 stocks. It's 500 stocks, and no, it is not all tech. A lot of it is made up of banks, REITs, consumer goods. So it's not all your tech. So even if the Nasdaq crashes, the S&P might make highs, like what's going on right now. And unfortunately, like I just said before, I don't decide what the market is. The people decide what the market is. And unfortunately, the S&P 500 is considered the market. So I'm not the one that decides it. So with the S&P, and the S&P is the basket of 500, historically it trades at 20 to 22 times earnings. So if your stock trades at 50 times what they make, so let's say you buy a stock and it's $100 per share, you're buying it. And when you look at EPS, which is earnings per share, is $1. Your stock is trading 100 times earnings and is really high compared to S&P 500 because that's what's considered the market. Now, is that okay? I would say that's okay if the top line growth far exceeds the S&P. So let's go back to S&P. The S&P 500 is a basket of 500 stocks. So I would say the average S&P, the top line growth, is between 10 and 20%. So top line growth is sales or revenues. And when you look at earnings report, all you have to do is simply look at this year to last year. YOY is a year over year. So if your stock that you're trading at, you bought for 100, they make $1, it's trading 100x. That's what it is, 100x. But that stock is growing at 40%. Maybe that's okay because the S&P 500 doesn't grow that high. So relative to the market, if your stock is a higher PE than S&P 500, it had better grow at a higher percentage year over year than S&P 500. Now you can also look relative to itself. Last year, what was the PE at this time? What changed in the last year? Are they making more money? Did they expand, grow into a market where they could make more money? Did sales go up? Those are things that you want to look for. Okay, so the next post was why this correction, it was inevitable. Now, it wasn't like if you read my post, I've been saying this weeks even before it happened. So it wasn't like, that I'm going back and saying, oh, I knew correction was happening after it happened. I was saying the sign before. So unfortunately, I'm not trying to knock anyone on Reddit or YouTube. And if you already know me, I don't knock anyone down. I want everyone to make a lot of money. But unfortunately, it's retail traders. So when I started trading a long, long time ago, retail trading was 2 or 3% of the market. Even in 2010, 2012, it was 10, 11% of the market. And then now it's over 20%. So the volume, 20% of the daily volume in the overall market is going through retail. So what's retail? Retail are the people on Reddit, the people on all the forums, the people at home that couldn't go to the casino, the people that see that you don't have to pay commissions anymore. And hey, what the heck? I'm home. I'm not working. I'm getting stimulus money. Let me just buy stock. So what does that mean? That means that unfortunately, and once again, I'm not trying to knock anyone down. If you're making money, great. So basically, our stocks are inflated. Our stocks are inflated. So we're paying higher now than we would normally pay. So inevitably, if all these new traders are pumping money into the market day by day, stocks are going to go higher. And then you're going to have to pay higher. If you want to play and stay in the game, you're going to have to pay a higher price. Why? Because retail is in there and they're bidding stocks up. They're bidding stocks up. So the correction was inevitable. The next post was, how can you tell if you're a good or bad trader? How can you tell if you're doing things right? So like I just mentioned on the last post. So in this case, the Nasdaq is down 10%. And unfortunately, this past week, 2 of my plays are down. So unfortunately, if you're in my in these 2 plays, you're doing worse than the Nasdaq. Because if the Nasdaq was down 10% and these stocks are down 15%, you're doing worse. But in general terms, we're going to speak about the S&P. All right. So from January 1st to March 28th, right? That's a good period of time. I think the S&P is up maybe 5 or 6%. So the S&P, like I said before, is considered the market. Not because I said, that's what people say. So if you're up more than 5 or 6%, give yourself a pat on the back. So you're doing better than the market. If you want to compare yourself to the NASDAQ 100, same thing. If you want to compare yourself to the Russell 2000 or the Russell 1000, pat yourself on the back if you're doing better than they're doing. I believe the Russell 1000 is doing the best out of all the indexes. The Russell 1000 is more micro cap focused. So that's how you can measure whether or not you're doing good. Now, comparing yourself to other trader is not fair. So don't read Reddit that this person is up 50% or 75%, 100% and just say, you know what, I should be too. I'm better than this guy. No, don't measure yourself like that. Because this takes time. You can't look at 1 month or 3 months and decide that, oh, I'm a great trader or I'm a bad trader. Now I'm trying to look for followers, so I'm not going to mention this big time money manager right now that was up 155% in the year 2020. And hats off, credit to them. That's fantastic. But now they're down 30%. So the moral of the story is you can do great, but if you don't do great over a long period of time, it's not fair to measure yourself up against another trader or another firm or a mutual fund. I mean, you can do it just to get an idea, but don't kill yourself if you're not performing the same. Okay, so the next, spotting shill companies that are constantly selling shares and do not generate money from their own business. Now, there's a lot of these. But once again, this is YouTube. I'm trying to gain followers. So I'm not going to call out your stock. But there's a movie theater chain. Actually, that's another post. So I'm going to go over that later on. But basically, if you take a look at, you know what? I don't think there's going to be a lot of people on YouTube are they going to kill me about Sundial. So I'll mention Sundial. If I lose a couple of followers because Sundial, I lose a couple of followers because of Sundial. Okay, so Sundial has a symbol, SNDL. Take a look at the news headlines. Every 6 weeks, the company sells shares. Every 6 weeks. It makes money by selling shares to bag holders to the tune of $1.5 billion. $1.5 billion. This is not from sales. It's not from their weed business. It's from selling you shares. And some people are buying at $2, $3, I think it hit $4. So at one point in time, this was an $8 billion company. My friends, they had $13 million in sales from September to December. So ask yourself, and this company lost money, but ask yourself, if the company's business is to sell weed, and from the sale of weed, I'm not talking about profits. I'm talking about sales of weed, their main business, was $13 million in revenues. And they sold $1.5 billion and they got from selling to bag holders? You tell me, is that a shell company? What if they close up shop? All the CEO, the CFO, the board of directors, everyone is selling. It's an ADR. I believe it's Canadian based. Like they don't even have to do Form 4s. So basically everyone there is getting rich off of traders. That's a shill company. And there's tons of them. Big ones. But like I said, I'm trying to get followers right now. When I get 2,000-3,000 followers, at that point in time, I might call out companies call out mutual funds, hedge fund managers, whatever the case is. But once I get there. So spotting the shield company. If you check the news and the company that you're buying is constantly selling shares, stay away. That business does not have sales. The business is not making money. And they keep printing brand new shares. And people keep buying and keep saying it's going to go up. How is it going to go up? They're selling more shares. So we're going to go to the next thing. How to read an earnings report and what to spot an earnings report. So just like I was saying with the shell companies. Okay. So you're buying a stock. The company is valued. We're going to use Nautilus because I'm a Nautilus bull. So I don't think YouTube is going to go nuts on me because I mentioned NLS Nautilus. Okay, Nautilus at the present price, it's around $15. It's $450 million. That's the whole company is valued at $450 million. So in the fourth quarter of last year, they made $40 million. They made $40 million. $40 million at this time is 1/11 of the entire company's value. The entire company's value. Let's not even go a lot further to the future. Okay, let's say this quarter, which is ending in a few days, which will be January 1st to March 31st. The company has already forecast that revenue is going to grow 55 to 75% over the previous year. So what does that tell me? Like if I take a look, I'm on my phone, and take a look at Nautilus. Sorry, I didn't do this before. I didn't do this before. And I'm not going to erase this video, which is now like 30 minutes long. But I'm going to look at Nautilus. And Nautilus, they're expected to announce earnings on May 3rd of 42 cents. Expect to beat. Expect a big time beat. And if they made 97 cents, and they made $40 million, and now they're expected to make 42 cents, but it's going to probably be around 50. So what does that tell me? It tells me that means they're going to make another 20 million. All right? All right? So 40 plus 20, that's 60 million. And this company is valued at 450 million, and the company is growing. So what does that tell you? That tells you the stock is very cheap. Why? Because if the company keeps making money like this, what can they do? They can buy back shares. They can invest in business. They can take the company private. Why? Because they're making money. I don't like companies that don't make money. Companies that don't make money work when everything is green. But when things go red, you can no longer buy companies with no PEs that don't make any money. Make sure you buy companies that make money. So that's an earnings report. So when just like I said with the earnings report, I'm going to give you a bad example. We're going to use SNDL because you know what? I'm not going to lose a ton of followers by calling out Sundial. So Sundial right now is worth $3 billion. Do you think a company that's valued at $3 billion that loses money, that had $13 million in sales, is that a good earnings report? Please tell me, is that a good earnings report? The company is worth $3 billion. 13 million in sales. I just told you Nautilus, $450 million in value. And they made 40 million. They had over 100 million in sales. Why is Sundial, that loses a ton of money, that is not growing? Even check their revenue growth. The revenue growth is not good. So that's an earnings report. I did another post on bankrupt companies. This is the only time where bankrupt companies could be trading high. So once again, I'm not going to name names because I need the followers. You know, I need the followers right now to try to monetize this YouTube thing. So I'm not going to name names. But in 2020 and 2021, with the retail investors and with the Reddit thing in January, there's quite a few of them that have been going through the roof. Companies that were about to go bankrupt, that are trading at at super, super highs before the pandemic. Like, in all honesty, they actually owe Reddit. Reddit is thinking about doing an IPO. They owe Reddit money. Honestly, I swear they owe Reddit money. Because without Reddit, without the army of that forum, but I'm not going to mention it because, like I said, I need followers. I don't want to point anyone out until I get there. Without the forum, a lot of these companies that are bankrupt would be bankrupt. Because what happens when these stocks rise and the companies that don't have money, they sell shares. Insiders sell shares. The company prints shares and they can stay in business. So with the retail traders, 2020, 2021, and the likes of Reddit. So when Reddit IPOs, these companies should donate to Reddit. Whether they will, probably not, but they should donate to Reddit. The next post was about buying the dip. And reasons you should buy the dip are reasons you should not buy the dip. So companies like Tiger, once again, like if I'm bullish on something, I don't think a follower is going to say anything bad about me. So NLS, I already went through, but Tiger, let's go through Tiger. Tiger dipped from about $20 on Monday to as low as $14 yesterday. This is a stock that you can buy the dip. Why? Because Tiger was expected to make about $40 million in sales and make no money on the $40 million. Instead, on Friday, but unfortunately they had that China news, it came out, Tiger reported sales of $48 million. And on the $48 million in sales, they made $9 million in profits. So it's a huge beat, 138% revenue growth, and from not making any money to making $9 million. Now, why does this matter? Why does this matter? Because Tiger is growing at 138%. 2020, they had about 140 million in sales, right? About 140 million. In 2021, which already started, we're in the first quarter, almost done. They're expected to get about 260 million in sales. About 260 million. I am telling you that is very low. Even though that's like 80 or 90%, Tiger will grow at 100%. And there's a good chance next year it's going to grow at 100%. But I don't do that rhetoric, and I'm day trading. But there's a good chance it's going to grow at 100%. Pick your stock, any stock you want on the index. Take a look at the year-over-year growth. You will not find a profitable company with 138% revenue growth year-over-year. Check. Whatever stock, whatever stock is doing great. And there's quite a few. And you know what? I'm not going to lose followers by saying the companies that are doing great. So take a look at Shop. Take a look at the Trade Desk. Those two companies, like sales, have going great. But you're talking about 40% growth, 60%, which is hyper growth. It's hyper growth. But it is not. Tiger's 138%. So let's just say that Tiger does a 300 million in sales for 2021. Let's just say, and I believe it might even be more. But let's go on the safe side because analysts have it at 260. Let's say it gets 300, which is the safe side, like I'm saying. So on the 300 million sales, I expect 40 to 50 million dollars in profits. What does that mean? It means about 40 or 50 cents per share. And now that they're making money and the stock is trading at 15, all of a sudden the P is very, very low. Now before, Tiger wasn't making any money. You know, so I knew when I was buying Tiger, I wasn't buying it for earnings. I was buying it for growth. Now that Tiger is making money too, of course you're going to buy in the dip. What not to buy in a dip? Companies that have no PE, that aren't growing 40 or 50%. They have no market to get the business. There's another stock, and like I said, I'm not trying to get, I'm not trying to make enemies yet. But there's tons of stocks that I can name you that don't have the market to get that money, and they're losing money. So let's just say you bought a stock at 100. It dipped to 80. You're thinking that is cheap. It dips to 60. You want to buy more. You want to buy the dip. And it goes to 40 because you can't time a dip. You can't time a dip. But then when you look at the fundamentals, sales growth, 25%. You might tell yourself, you know what? It's 25% now, but that's nothing. It's going to grow at 50%. I'm sure of it. Why? The analysts are saying. But you know what? Actually, I'm better than analysts. I'm telling you it's going to be 50%. So your job, because you become an analyst, is trying to see the market for that company. Now, going back to Tiger, China and Tiger, I believe, has close to 1 million clients. Do you think China, with the billions of people, that Tiger can't double their accounts? Do you not think that's not going to happen? Now, your business, I don't want to make enemies, so I'm not naming names until I have more followers. But your company, do they have a market like that? Do they have a market like that? If they don't have a market like that, there is no chances growing at 100%. None, zero. Tell your money manager to contact me. Contact me on Reddit. Contact me on YouTube. It's not happening. All right, so that's buying the dip. The next post, and you know this post took me a whole bunch of time. I am not kidding you when I say I put in terms of writing, formulating what I was going to write, what I was going to do. It took me between 10 and 20 hours. Actually, it took me probably closer to 20 hours. So this was a post about day trading, swing trading, some differences, and why I am a day trader. So I started doing this when I was 14, 15. Trading was on the phone. It was $50 a trade. So when I started having America Online in 1996, on 56K dollar, I was able to get quotes, on the computer. It was awesome. Quotes on the computer. Then I opened up an E-Trade account. It was I think it started at $25 a trade, and then it went to 20. So the more active as a trader you were, the cheaper it got for you. So over time, I had to change the way I trade in order not to pay a lot of commissions. Because I mean, if you were paying $50 per round, it ended up being a high cost. So I had to go myself to become a day trader. But for you, why a day trading makes sense? We're going to take a look at. I hope this doesn't rocket. Okay, I don't want to lose followers. I'm actually a rocket bull. So I hope I don't make enemies by naming Rocket. I love Rocket. Rocket makes a lot of money. They're the #1 online mortgage broker. Symbol RKT. Right now it's trading at 22. When I had the Army, it went to as high as 42. I was telling people that follow me, like once it passed 24, 25, like that's it. It went parabolic, and I don't know. Because people are asking me what to do, and I always say, sell half. Whenever you're not sure, sell half. When it goes higher, sell the other half. If it dips, buy back the half you sold, if you truly believe in it. But I do believe in Rocket. But I'm using Rocket as an example for the day trading, swing trading. So with Rocket, all right, for the last 6 months, I've traded Rocket so many times. I would say that I got about $15 on Rocket in the forms of 25-cent trade, 50-cent trade, as high as 125. But every single time that you go around, it adds up. So when it went up to $42, I lost out. I did lose out. I traded Rocket. I got my use out of Rocket. Now it's 42. I missed out because I traded $15. But now what? Now what? What if you were a long-term trader? You know what Rocket is now? 22. You know what Rocket was before the earnings report? 21. And I got $15 on Rocket before. And now Rocket is back in my trading range. So without going into huge detail, you can read that post. This is why day trading is better. You know, I'm not saying don't hold Rocket long term. I'm not saying that. I love Rocket. I love Rocket. And if you have another 2 quarters like this, it could be worth 30. Based on the last report, which was amazing, and they even gave a special dividend, I would say your safe trading range on Rocket is 26 or below. So it is in a safe trading range, but people just hate Rocket. And I'm going to be trading Rocket again soon. So we're going back to the next post. How to become a successful day trader and what kind of devotion you have to have and what kind of formula you have to follow to be a millionaire. I get this question all the time. Not just from new traders. I get it from people that have been trading a long time. They ask me the expectations, what they can do to make more money, what kind of keys to success. Now, in this post and on YouTube, I won't go into details about my personal experience of what I had to go through. But basically, if you read that post, it shows you what I had to go through in order to have my success. And unfortunately, the truth of the matter is, I don't believe that anyone's going to have to go through what I had to go through. Because right now you get quotes on the computer. You get quotes on your phone. You have watch lists. I mean, you don't have to do what I had to do. What I had to do when I was a kid was go to the Wall Street Journal. I had a diary because I didn't have internet. I didn't have internet till like 1996, 1997. So I had to write down the quotes, the end trade, the beginning trade, all the symbols. Almost 3,000 symbols. And I had to study them. I didn't have to, but we didn't have the computers like that. We don't have all the social media. So when I was a little kid, I just had my journal with 3,000 tickers with what I traded on Monday, what I traded on Tuesday, what I traded on Wednesday, what I traded on Thursday, what I traded on Friday. So I would go back 2 weeks. I would keep checking my journal, just flipping through, trying to notice trends. So these are the things, like right now, not even talking about what I did. Not even talking about what I did. Just we're gonna go forward. So what I try to tell people in this post, if you read it, is create a watch list of 200 stocks, 200 symbols, tickers, and on these 200, don't just put 200 garbage tickers. There's like 10,000 stocks that trade. Do not just pick any random tickers. Pick quality companies. Put 200 tickers. Quality companies. Follow them every single day. Follow the volume. Follow the news. After 2 weeks, if you did, just like I said, you followed them closely, you must follow them closely, then you're going to notice a trend. You're going to see like 5 or 8 or 10 of them that are acting strangely, oddly. You're going to take them and put them into your play watch list as a stock that you're to trade. You're going to follow them and you're going to trade them. So why do I say pick 200? Because at 100, you're going to be forcing yourself to put stocks in your playlist. The list that you're looking at to trade. Do not force yourself to put stocks in the playlist and force a trade. You're going to lose money. If you're trying to force a trade, you are going to lose money. But if you have 200 symbols, guaranteed you're going to get 5 or 10 that are acting funny throughout the day. And you're going to take the ones that are acting funny and you're going to make money on them. That's what I do. I have over 800 tickers on my watch list. Okay, but these are compiled since 1995. I've either added or taken out. I create a different watch list. Like I said, if I create another group, I will spend the 15 or 20 hours of time going over the watch list in detail. Well, what I'm trying to say is I have a list of 800. And in the morning at 7 in the morning, I look at my 800 and try to see that activity. Then I move stocks into my playlist and I trade them. So that's how you can be successful. Watch 200 stocks over 2 weeks period of time. Gather a pattern, volume, news, and start moving them into a playlist that you could trade. Okay, What do you expect when a company prints an enormous amount of shares? Okay, obviously, just like with Sundial, unfortunately, I'm going to lose. Maybe I'll lose a couple of people. We're going to use that example again, but there's a ton of them. Oh, early on, I said about a movie theater. Now, I'm not going to mention the movie theater. We all know what it is. They have a vote on May 4th that they're about to print 500 million brand new shares into the market. Okay, this company in 2019, and I did trade it at that time, had 100 million shares. Now they have 450 million shares. 451 actually. And the stock is trading at 10. So let's just say it was trading at 10 when they had 100 million. And it wasn't. It was trading like at 7. But let's say it was trading at 10. And it had 100 million shares. That gives it a 1 billion market cap. So now with 450 million shares, trading at 10, it's 4.5 billion. Does that make any sense to you? Why is a company that has no sales, more shares now, is worth more? And what if they print this 500 million shares? And by the way, they need that 500 million shares before they go bankrupt. Unfortunately, bankruptcy might be imminent if you guys don't vote for those shares to come out, because they have about 300 million in cash as of March 1st. Their running rate on their cash flow, like if you look at financial statements, is approximately $100 million a month. So May 4th is about the time where either they need blockbuster movies, or they need to print shares. So when they print shares, that's a bad sign. Get out before that happens. If you're playing these momentum speculation names, get out before they dump. Because if you're so worried about people shorting, what's going to happen with the company that you're buying prints brand new shares? That's a lot worse than shorting. Okay, and my last post, there are a couple of posts about reaching out to companies to increase shareholder value. Now, I don't expect any new trader to do that. And it's not necessary. You can do that, but normally they don't get back to you very quickly. You just go to the company's website. Let's use Nautilus in this example because I did that. You go to contact us. You go to investor relations. The gentleman's name is John Mills. He's very friendly. I had a 10-minute conversation with him. I sent off 3 emails to him as well. So you can do that. You can increase shareholder value. They are allowed to give you some information. Most of it that's public knowledge when you speak to them. Like he laughed when I said whoever's shorting the company, what puts with expiration date of October 15th at 12:50. He and I both laughed because what the hell? At 12:50, the company is worth like a little over $300 million. And like I said, with earnings, they are going to make like $100 million. How is a company that makes $100 million worth $300 million? That doesn't make any kind of sense. So he left. So certain things like revenue growth was going to grow 55 or 75%. That's happening. They'll tell you. You can go over that with investor relations. Once again, that isn't something that you're required to do, but you could do it anytime. You could reach out to them. If the company is solid and good, they'll get back to you. So it's about 55 minutes. I'm not trying to kill you guys, but I just want to go over a lot of the posts that I wrote. You know, I took time out to do it. This was about 30 days because my forum, The Ultimate Traders, has been open for about 32, 33 days. So these are quality posts that you can get, that you could read, and hopefully you make money on it, you learn from it, or you save money. All right, I'm going to do another post in a little bit that describes a little bit about my trading, like trading strategies, because I had a lot of requests. But this is Nathan S., Ultimate Traders, and hopefully we're ready to make more money. All right, bye-bye.